Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on Bitcoin that's continuing its way up, making a series of higher highs and higher lows, showing a lot of strength. And this really goes against what most investors were saying was a dead cat bounce here. The beginning of a bear market, you were looking at any news media outlet, they were talking about Bitcoin heading back to its lows. Now, of course, those people do not understand what is going on with Bitcoin. They don't understand the innovation behind the technology and the sheer financial revolution, which is creating these large moves in price and an increasing amount of interest from the large players coming into the asset. Now, we believe we're going to continue to see major euphoria in cryptocurrencies. Heading into year end, we have a price target that remains above $100,000. I'm going to discuss that in this video, and this remains the biggest investment opportunity of the decade. We've been positioned to take advantage of it, and we do believe that we are hopefully now well positioned to take advantage of the rest of the run. Now, if you want to follow that with us, make sure to smash that subscribe button and of course that like button as well if you're learning something new with these videos. Now, what's happening on Bitcoin here and what are we going to talk about in this video? This is going to be a very important episode. Of course, we're now 74% up from that bottom here at $29,000. So can this really continue going on without a pullback? Hopefully, we're going to answer that in this video, but most importantly, we're going to talk about the relationship that Bitcoin has with the rest of the financial markets and what big hints the markets are dropping right now on Bitcoin's next move. And these are some very important concepts that are going to be covered in this video. I don't think many crypto experts, crypto traders are talking about these concepts because they don't really know how the financial markets operate. They know how Bitcoin operates, but Bitcoin is now a financial asset, which as traders and investors will give us an edge. Now, without further ado, let's get right into it. Let's take a look at what's happening with the actual price action using this major price channel we've been looking at. Big levels to watch on this channel, capturing these major highs, capturing these nice levels of support. This is a level that market participants are watching. Just look at this line here, capturing all these reactions along the way. This is the type of level that I want to be watching. Also, of course, capturing that significant high on Bitcoin. You would have timed the very top of the bull run here. And if we zoom in, you can see we're coming in to that resistance level we talked about. This is a significant line of resistance, quite a few reactions, and we're seeing Bitcoin build divergence here with the RSI coming down, price grinding up slowly up to that line of resistance. So this kind of setup with a strong support level, divergence, that can typically lead to a correction, or, the most bullish scenario would be a period of consolidation under that level before we break out. Do not forget that Bitcoin is in a bull run and Bitcoin is Bitcoin. So if it wants to burn through these divergences, make a massive melt up through that resistance, if Amazon comes out saying that they officially accept Bitcoin, would that create another momentum fueled move and renew that momentum? Absolutely, right? So although we could get a short-term pullback, we believe that the risk is to the upside and we are positioned accordingly. Now, in the last video that we made on Bitcoin, we discussed this spike right here on the on-chain data. These are the spent output H bands. This is a very important indicator to watch out for. So we're closely looking at that. When you get these big spikes, it means that old coins that have been sitting around for quite some time are being sold, right? And that's something very important to watch. If you've got investors that have been holding coins for 2, 3, 4, 5 years that are selling their Bitcoins, those are people that know how cryptos work. Those are people who know how to invest and how to trade Bitcoin. And you can see from this graph, we talked about this in the last episode, they often sell into strength. And that's exactly what you need to do as an investor on Bitcoin. When you get these big parabolic moves, you need to be selling. That's why you get those spikes when Bitcoin makes that type of move. And during a bear market, they sell into strength as well. on those dead cat bounces, you've got those investors that book profits, and that tends to correspond to big tops, right? So when you get a big spike like this, that's often a big top in Bitcoin. So we discussed what was happening right here with this spike and suggested that, that was something to watch out for that could potentially trigger some sort of a short-term pullback to what happened more recently. We saw that spike move back all the way down to its lows here. So that's a very important development. Maybe those investors were booking profits just before the Jackson Hole meeting, maybe out of fear that the Fed was going to make an aggressive tapering announcement. That, of course, proved to be a non-event. And now we've seen this smart money, the profit taking in altcoins, come back down here. So what does that mean? That's a pretty bullish development. If we take a look at what type of price action you get after a significant low like this, it's actually pretty bullish, right? So we had a big low here in around July 2021. That was obviously a period where Bitcoin was extremely low. Not much smart money was booking profits at that time. Now, if we go back a little bit further into that 2020 euphoria, back here in January 2021, you had a significant low in the smart money profit taking, and that corresponded to a significant low in Bitcoin. Let's look at this low right here in December 2020. Significant low on Bitcoin right before big move up. Let's look at September 2020 here. Big low on that profit taking, big low on Bitcoin. So of course, nothing is guaranteed. Just because in the past it did create some moves up, that was, of course, a very strong period for Bitcoin. That doesn't guarantee that the same thing is going to happen. But compared to the last video where we saw that big spike, this is a very bullish development. So that does improve our short-term convictions for Bitcoin. But now let's get into the interesting part of the video where we talk about Bitcoin's relationship with the financial markets. Now that's called cross-market analysis, comparing different financial assets to each other and observing the intricate relationships between each other. That's cross-market analysis. And it's one of the fundamental cornerstones of what we focus on with our research at gameoftrades.net. If you're looking for high quality crypto research that doesn't just take into account the actual cryptocurrencies, but actually considers what the financial markets are doing, what the macroeconomic environment is, and how that should impact your positioning on Bitcoin, we post weekly overviews of Bitcoin. And I'm going to quickly show you an example of last week's Bitcoin overview. We take a look at the key news events that occurred in the cryptocurrency space, the most important on-chain developments that basically gives you everything you need to know about Bitcoin's overall health, the sentiment in cryptocurrencies using various models that measure investor sentiment, the most important technicals that are happening, overviews of the altcoin market, and when it's the perfect time to jump into the altcoins, because that's really where you can take advantage of truly massive returns during the rest of this bull run by being properly positioned into Bitcoin or altcoins at the right moments. And of course, cross-market analysis. We've had some tremendous feedback on these recent posts that we've made on Bitcoin, these weekly overviews. And again, the price is not likely to stay at $29 for much longer. Most other crypto research websites are selling their memberships for hundreds of dollars a month for research that's not necessarily much more advanced. So again, I strongly recommend that you take a free trial and test out our service. Now back to Bitcoin, the first thing that we need to establish to understand Bitcoin from a cross-market standpoint is whether Bitcoin is a risk-on or risk-off asset. Now, some assets are going to perform a lot better when the market environment is risk-on, when economic numbers are strong, there's a lot of growth, inflation numbers are strong, but those assets are often going to underperform during periods where you're seeing a risk-off move in the market. And in those periods, you're going to see risk-off assets perform better. And this is treasury bonds that I've added here. And throughout this period where IWM, for example, the small caps index, was underperforming throughout the first half of 2021, we saw TLT move higher, right? This is a risk-off asset. That's a perfect example of some assets performing better in some types of environments and some assets in other environments. That's the way the markets work, and that's one of the fundamental points if you're trying to understand cross-market analysis. So what's Bitcoin? Is it a risk on or risk off asset? And the best way to measure that is by putting it against the 10-year yield. And I do believe we've talked about this relationship before on this channel, but just look at this. Let's zoom out a little bit here, going back to 2020, January 2020. And you can see Bitcoin tends to have a positive correlation with the 10-year yield, meaning when the 10-year is going down, Bitcoin often follows. When the 10-year is trending up like it was here throughout 2020, May 2020, and then really picking up speed towards the end of 2020 and beginning of 2021, we saw the 10-year yield rise and Bitcoin rise. Then you had that top in the 10-year yield, then a top in Bitcoin, move down in yields, move down in Bitcoin. So assets that have a positive correlation to yields are risk on assets, because yields rally, yields go up when economic strength is elevated. When there's a lot of demand for credit, that's when yields go up, and when demand for bonds is low or sellers of bonds are high, right? And so that's an environment where either you've got a lot of inflation or you've got a lot of growth. So that's risk on. And so that's when you're going to get assets that are risk on that perform better. And Bitcoin, without a surprise, is a risk on asset. Now you can see what's been happening here. Very recently, we had this move up in Bitcoin that was actually timed perfectly with the bottom in yields, right? Further highlighting that relationship. Bottom in Bitcoin, bottom in yields. But you can see Bitcoin is anticipating here a move up in the 10-year yield. Now that's why you need to be watching the 10-year yield. If we get a breakdown here on that 10-year yield, we could get a correction in Bitcoin. That wouldn't be surprising. So watch out for that, because when you get these moves that anticipate a risk-on environment and you eventually get a breakdown, that's when investors can get spooked and cause a little bit of a short-term correction. That's possible. Now, what do we think is going to happen with yields? Now, if you've been following our videos on the stock market, you'll know that we're not expecting much more downside in yields. Now, could we get a short-term correction as we continue to consolidate here on that 10-year yield before moving higher? That's possible. Perhaps that's going to cause some turbulence on Bitcoin in the short term, especially as we get that divergence heading near that resistance. That could be a potential setup here. But right now we have a pretty strong case for higher yields. We think there's going to be inflation heading into year end, and that's going to cause a rally in the 10-year yield. And I also want to take a look at lumber here. A very, very important chart to look at here. If you're following us on Twitter, you'll know we tweeted about this. We had a massive move up in lumber here, a 39% move up from its lows. That's a massive move up. And why are we looking at lumber? Because lumber is often used as a leading indicator of economic strength, because lumber is used to build houses, and when you've got a lot of demand for housing, lumber prices go up, and that also tends to correspond with a strong economic environment. So lumber is often used as some type of an indicator to tell you whether you're going to get a risk on or risk off move in the market. So seeing lumber jump up here, that's telling me we might get a risk on move in the coming months, as opposed to the risk off that we've been getting since early 2021. We've had lumber come down, and we've had most risk on assets underperform, right? We've had small caps underperforming. We've had bonds rallying. That's a risk off move. But what lumber is saying here is that that's over and that we're now getting back into risk on. So, pay attention to that over the next few weeks. If we zoom out here, you'll see why that's important. I'm going to put the 10-year yield on top of this chart. And here, look at this move in lumber in April telling you, hey, there's going to be a risk on move coming very soon. And right towards the end of that rally, that's when you really started to see yields rise, and so Bitcoin rise along with it. So what I'm seeing here on lumber, that's good news. Of course, if we turn back around, that's bad news. That's why we're here watching the markets every step of the way. And of course, that's coming in an environment where you have quantitative easing, and historically QE leads to higher rates. Now, the deflationists will explain to you that this is not true and that in theory quantitative easing leads to lower yields, But just look at the data. QE, or at least the market's anticipation of QE, leads to risk on moves. It leads yields higher, bonds lower, and assets higher. Now, that's about all I wanted to say in this video. I hope you guys enjoyed. If you did, smash that like button, smash that subscribe button as well. Now, in the meantime, I wish you good luck on your trading and see you next time.